It's a global alert. I'm your host, Steve Van Metre, and thanks for joining me today. In our show today, it's 48 hours until a world-changing announcement. I'm going to show you what is likely to be announced over the next 2 days and what the reasons are behind this move. Plus, I'll show you what it means for the global economy and why investors are making the worst possible move right now. And with that, let's head over to Bloomberg, where we picked today's story up with a headline, is Biden sees more committed than ever as allies now see his exit as inevitable, and we're making the case of why this is likely to come this weekend, as Joe Biden is more committed than ever to beat Donald Trump, and we believe on this campaign we're built for the close election we're in, and we see the path forward. This from Jennifer O'Malley Dillon, Biden's campaign and chairwoman. The problem is, what if the election isn't going to be that close? Well, then they have no other choice now but to have President Biden step aside for this election. But even as a longtime aide insisted there was no chance Biden planned to drop out, NBC News recently reported that the president's family members have discussed what a possible exit plan would look like. The report underscored the extent to which the unprecedented pressure campaign from party elders and donors has rattled Biden's re-election effort, drawing in even his fiercely protected family, suggesting that an exit plan is now inevitable. And of course, it has much to do with the economy just as well as his chances of actually winning. And party leaders are eager to take the fight to Trump, but Democrats lose the opportunity to go on the offensive each day that the Biden melodrama dominates the national conversation. A poll released Thursday by CBS News showed Trump with a majority, 52% of likely voters. We're moving toward the convention, and there has to be decisions made, and that's exactly it. With a month left to the Democratic National Convention, they do have to make a decision, as well as you, as when, of course, you're going to start making money trading. Check this out. As of close of business yesterday, our CTA Timer Pro had 6 trades stopped out. I'm going to show you these. We're now seeing on a 75% win rate where they're open trades. As the market moves down, we're rotating into things that do well in a decline of equities. Momentum Timer Pro seeing on 10 open trades, 100% win rate as of yesterday, 5 stopped out. Check this out. CTM Timer Pro, look at the trades that we stopped out on. Win, 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 win. And how do we do that? How do we beat the market like this? Well, we look for times when machines are deeply short and when price moves against them. Our report flags those, and I tell you the ones to look at. And if you're a technical trader and like to move on momentum, look at these 5 trades that all stopped out for a gain for our subscribers. And how do they do that? Well, we look at momentum and the technical signals. We smooth them out with a proprietary overlay, and we look at them over daily, monthly, quarterly, and semi-annual signals. And when our report flags it, well, we give you, of course, the daily report. We show you the signals on the first page of every report. I go through them, give you my opinion on them. That's how we're able to do so well. I give you the stop loss levels. I show you the tracking and trades, and we give you a weekly update on every position, including the stop loss levels. We make it easy, so easy you even get a free 30-day trial. Could you imagine if you had those kind of returns in your pocket on your trading account? And as the market sells down, it's going to create more opportunity, and you can get in on that 30-day free trial right now. None of my buddies do it because they know theirs don't work as well. But Pelosi told Biden in a private conversation recently that polls show he cannot beat Trump and that his continued candidacy could rob the Democrats of the chance to win back the White House in November. And this is a case that I've been making. It's very simple. If you have a chance at losing the White House, you have to do whatever it takes to put a candidate in that can win. Now, here's my question. Does it matter if you're a Republican? Does it matter who goes up against Trump? Does he win outright no matter what? Or do you think there is a Democratic candidate that stepped in place, could beat him? Weigh in the comments below. I'd love to know what you think, what is going to happen at this election, as those concerns echoed ones raised in closed-door meetings with Biden by Senate Majority Leader Chuck Schumer and House Minority Leader Hakeem Jeffries. And for good reason. There were other signs the president has become open to the possibility of being replaced on the ballot. And it makes sense. Is this worth taking the whole party down and losing the White House when you could simply step aside and let someone else that has a better chance of winning? Because right now the markets are starting to sell off. This could be the sign of a larger correction. And this is one of the moves you're going to see later that investors are making the wrong move on. ABC reported that Biden asked for polling on how Vice President Kamala Harris would perform, citing an anonymous senior administration official suggesting that perhaps he believes that she could be the one that would beat President Trump. What do you think about that? Again, keep weighing in the comments. Can Kamala Harris take down former President Trump at this point? Let's see, because Trump is basking in total control of the GOP as Biden campaign hits low, and this is a big issue as the polls start to show a skew here. We're going to look at that in a moment. It suggests that where, of course, the tide of this election is going to turn. It's going to have economic implications. The problem is, as I'm about to show you, it's the economy that's also going to make this decision for President Biden, and for a good reason. He offered soaring promises not backed by details, pledging to drive down prices on day one, bring down interest rates, and lower energy costs, while both reducing taxes and slashing the national debt, which has soared under both Trump and Biden with large annual deficits. Of course, we know a couple of those can happen, and we'll show you what they are. But let's look at one of the reasons why President Biden is likely to step aside here, as we look at some recent polling now from the swing states. And what do we see? Conducted July 15th to 16th by Emerson College Polling and sponsored by Democrats for Next Generation Finds. Former President Trump leading President Biden in 7 swing states in a national poll. And if you don't think this is getting the attention of the entire Democratic Party, it is, because they're facing a risk of losing the White House and they don't want to do it. In the July 15th or 16th national poll, 46% of registered voters support Trump, while 42% support Biden. And recent polling shows Biden losing support more significantly than Trump gaining it since the attempted assassination. This raises questions about whether Biden's decline is still influenced by the debate or if Trump has reached his support ceiling. What do you think? Is this about, of course, a decline since the debate, or is it about, of course, Trump hitting his ceiling? Again, weigh all of your opinions in the comment. I would love to read them, because here's the second issue. It is all about the economy as we look at continued unemployment claims. We know that right now President Biden wants to see inflation come down, needs to see the labor market intact, and needs the Fed to cut rates. But here's the problem. If we do see a rise in continued unemployment claims, look what happens. He's going to get inflation down, but not for the reason he wants. And you can see back here in the early 90s, even the dot-com bubble, the global financial crisis, inflation comes down as a lag against rising continued unemployment claims. Right now, we're likely to see inflation continue to fall, but if it comes on the back of an accelerated increase in continued unemployment claims, the chances of President Biden getting reelected as we head into recession get somewhere very close to zero. Remember, when things get tough, people start to vote with their wallets, and that's why the world now is getting ready for deal-making Trump with Biden on the ropes. They're getting prepared to see former President Trump back in the White House, as world leaders are already starting to think about what they can offer to Trump as part of any deal, whether it be more spending on defense, more investments from leading tech companies, or more purchases of U.S. goods. Similar to his first term, Trump has focused his campaign on how the U.S. is getting ripped off by its allies and top trading partners, focused on the monetary cost rather than the principle of defending the likes of Ukraine and Taiwan from aggression by Vladimir Putin or Xi Jinping. And all this does is sets up the Fed. Of course, we know that former President Trump has told Jerome Powell he shouldn't be cutting rates here. Of course, we know the Fed is likely to cut in September. The problem, again, is you look at the timeline between September and the November elections. It's too little, it's too late. Of course, what President Biden needs is the Fed to cut at the end of July. Odds are they're not, but I'm going to show you why when the Fed does cut, it's going to be way too late, because what it means is the economy is headed into a recession. And again, never good for incumbent presidents trying to hold the White House. As the Fed prepares for September job cuts, as Powell shifts focus now to the jobs market, and for good reason, because it's coming unwound. And we've said this is likely to happen, and now it is. As central bankers are ready to cut interest rates in September amid growing confidence that price stability is within sight, while risks to the labor market are now growing for good reason. We saw, of course, initial unemployment claims from last week, and this was cited as a number of issues that were one-off expectations, but when nobody could really comment about was why continued unemployment claims, again on a seasonally adjusted basis, went up by 20,000. But remember, on a non-seasonally adjusted basis, they're now sitting just shy of 2 million. If that number continues to go higher, it's game over for the U.S. economy, and likely means that any chance of getting reelected for president is out for Biden. And they laid the groundwork for the coming move in speeches over the recent week, as Chair Jerome Powell will likely flag it more explicitly after a policy meeting at the end of this month. It's not just about getting inflation down, Powell told lawmakers on July 10th. We need to be mindful of where the labor market is, and that is absolutely correct, because once the labor market starts to go, it is game over. You can't stop it. It is like a snowball that builds up steam going downhill, and as it gets bigger and bigger, it goes faster and faster, and sure enough, we can see how the Fed eventually reacts, although with a lag, to rising continued unemployment claims. And as we look at this chart here, you see continued claims as they head higher in blue. The Fed starts to cut rates, but the belief is, and this is what the market expectations are, is just a few cuts and everything changes into the favor of the economy. Of course, that's what the Fed wants you to believe, but history shows once it starts to spiral out of control, there's nothing the Fed can do to stop it, indicating that if we see a continued rise in unemployment claims here, particularly on the continued claims heading into the Democratic National Convention, look for the Fed to cut in September. But again, it'll be too little, too late. And once again, you can almost look at why, of course, we're going to face a recession at the time of the election. It has very little to do with who's in office in terms of the presidential office, but more to do with the Fed, as I'm about to show you. I do believe we're getting closer to the time when a cut in policy rate is warranted. The labor market is in a sweet spot. This from Fed Governor Christopher Waller, but the Fed needs to keep it there. Well, good luck with that. You've had zero track record of being able to achieve that, Waller. There is more upside risk to unemployment than we've seen in a long time, and that is absolutely true, because if we talk about why this is happening and why it's not just a fact that President Biden is going to face a recession going election, but if indeed former President Trump retakes the White House, he's going to be sitting right in the midst of what's going to turn into an all-out financial crisis. And it doesn't matter who's in office, because there's one big factor. With massive deficits, we already at the limits of what the government can borrow, setting up possibly the first globally synchronized recession where governments around the world are tapped out in their ability to deficit spend. And here you can see the yield curve. This is, of course, the great equalizer. That's shown in blue. And anytime 2-year yields are above 10-year yields, it shows inverted here, where that blue line is below that horizontal black line. And take a look at this. Continued claims, if we take and see if rates were to fall, this could be just on the Fed cutting alone, setting 2-year and 10-year rates lower. What happens is, of course, continued unemployment claims rise each and every time, indicating that right now, as the curve looks to steepen here, it suggests there's something serious wrong with the U.S. economy, and the labor market is going to come unwound in a big way. And yet, Bank of America says investors are buying U.S. stocks on odds of a Trump win and Fed cuts. And as I just showed you, the Fed cuts aren't going to be good for the economy. Of course, that means it's also not going to be good for the stock market. As U.S. equity funds absorbed about $45 billion, the fourth largest inflow on record in the week through Wednesdays, according to Michael Hartnett of Bank of America. Small cap funds have $9.9 billion of inflows, the second largest ever, while large cap funds received $27.4 billion. Traders are turning bullish ahead of the first cut as markets sell off, according to, of course, Hartnett. Investors are now assigning a 100% probability of a Fed rate cut in September, which I will say that's probably true, a 75% probability of Trump winning the presidential election, and a 68% probability of a soft landing in the next 12 months. How about this? We'll take that 68% soft landing and turn it into a whopping zero. That's right, a goose egg. Hartnett also said likely stocks will sell off after the Fed rate cut, calling it a buy the rumor, sell the fact opportunity. His team is also bullish on bonds. They expect any new tariffs enacted by Trump over the next 12 months to be deflationary rather than inflationary, as opposed to market expectations, which I'll agree. But the problem is the market is much more likely to sell off before that. Even Goldman Sachs strategist said in a separate note, also warning that the risk of a setback for equities this summer and that a correction rather than a bear market was more likely. How about this chart here? And we talk about what mistake investors are making betting on who's going to be in office, because it's the Fed and it's the yield curve and it's the creation of money in a debt-based economy that matter. Here you see this yield curve steepening as rates decline. This is called a bull steepener in yields. This is where Hartnett's got his bond call right. But look at the NASDAQ 100 in red. What you'll notice as the curve steepens, it has a bear market. The only time it didn't was heading into the pandemic, because what stopped it was the pandemic triggered, and of course there was a flood of government spending. But now look at the chart here. Everyone is bullish, saying stocks can only ever go up now, and meanwhile the yield curve is saying historically stocks, you're going to be not in a correction, not in a soft landing, but in an all-out bear market. And given the state, of course, of our small and mid-sized regional banks, it's highly likely that we're going to be an all-out financial crisis, and it won't be here just in the U.S. It'll be all over the world. So as we all stand by over the next 48 hours between now and likely sometime between the Democratic National Convention next month, what I expect is President Biden to step aside. The question is, who will he endorse, and can they beat Trump, who seems to be on a roll? And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.